My friends, I've got a video for you. The first and most important thing of today is Social Security. We are looking at something that people rely on, and unfortunately, it looks like it won't be there for much longer. The second thing I want to look at is real estate security, because of course, everybody believes it's always in one direction, but perhaps that's not always the case. And the third thing I want to look at is the economic security, because of course you look at the economy today and it is all over the place. It is not steady, it is not stable, and I'm going to give you the data surrounding that and so much more. Let's go. First thing I need to look at right here, Social Security trust funds now projected to run out of money sooner than expected. That's according to the Treasury itself. Now, how is this going to happen? How are we going to get more money in there? Is it going to actually happen? Or are you going to experience cuts? Is Social Security going to need to be cut? Is it going to be slashed just like the pensions? The Social Security Trust Fund most Americans rely on for their retirement will run out of money in 12 years. That's a best case scenario, okay? The circumstances which were exacerbated over the last year threaten to shrink retirement payments. They said it. They said it right there, not me, remember, and increase healthcare costs for Americans in old age sooner than expected. I am telling you what's going on, not based on something I pulled out of the air, okay? This is coming from the data itself, and it is already mathematically, it's an unfunded liability, mathematically impossible to ever pay back any of these things. And why should Social Security be any different? You're trying to take in money like a Ponzi scheme and pay out the rest. Eventually, that becomes an issue. The financial outlook for Social Security and Medicare, two of the nation's preeminent safety net programs, has deteriorated over the past year. It's been a long time coming, okay? It's been a long time. It's not the past year. I've been talking about this for quite a while, and I think that it's going to be an issue for so many people today because, yeah, if you're getting those payments today, maybe you're going to get paid. But 20 years from now, 50 years from now, are these programs going to even exist? Will there be any safety nets? Who knows? Who really knows? But anyway, they give you the data in here, just telling you where they project this to run out and so on. That's all nonsense. We don't really know exactly. But what we do know is that they are in some serious financial trouble. Look at the consumer sentiment dropping off, absolutely dropping off. And you could see that it peaked out around April at 88.3 and has absolutely dropped off right now. This information coming as of August. So, you're seeing this right now. Why? Because the prices that people have to pay for everything has gone up. I've shown you the details, not just industrial commodities, which I'll show you in just a second, but you're looking at agricultural commodities, the food that people pay at the store for everything. I've noted here on the channel, just about everything has increased in price, and that is, of course, never a good thing. Now, this article right here from Apartment List, which is a resource that I use regularly, it gives you some data. Now, you can move your mouse around here to see the Apartment List city level rent estimates, and that might be interesting to you. And they also have many other charts. But I wanted to show you this. Probably, you would already assume this, but to see it on the chart to me was very telling. The inverse relationship between vacancies and price. And you can see over 2020, on the left-hand side, we're looking at the National Apartment Vacancy Index declining down over that period. And so what happens? What happens to the price? As the vacancies start to drop, the price goes up. When the vacancies rise, well then, of course, you're going to see the price corresponding to that. And that is very clear. If you look at any area where they have these really, really low vacancies, they can command a higher price. But as soon as there's a lot of choice, a lot of options, like we saw in the core of many cities, their downtown core, people didn't need to be there. So what happened to the prices? They all went down, the property values as well as the rent. then you're looking at this. I'm probably cutting off half of this in the corner, but rents are rising quickly everywhere. And all I'm trying to highlight here is this. When we're looking into the dark red areas, that's ultimately the areas where the median rent price had increased 3% plus. And look, that's 2021, okay? All of these right now, all cities pretty much, no matter where you look at, whether it's the most populous or least populous cities, they are all experiencing right now, a big rent increase, okay? And of course, you get the Case-Shiller Home Price Index month after month after month after month of price increases. Now, I have more information related to this. I'm going to give you what's going on with some commodities and so on, but I wanted to show you what's going on and really simplify it through the Money GPS insights. Let's take a look. In the near future, unfunded liabilities will be unable to support people. We have all the data around it, we have the mathematics, and now it's becoming out there in the open for everyone to see. This is going to require more people to have more assets because, quite frankly, the government safety net will not be there to help people out. In addition to this, it's important for people not to lose money. I think that is truly understated because if somebody's about to go into retirement and suddenly the stock market falls down, their asset prices fall down, they are not going to be able to retire at the time that they need to, and who knows how long it can go on for. I've been covering this issue here and it persists. California port pileup shatters record and imports still haven't peaked. As I've talked about recently, imagine Q4, the fourth quarter of the year, is when the majority of the shipments are coming in for the entire year. So we have not even got there yet. Look, number of container ships at the Los Angeles Long Beach is now 4.8 times. So almost 5 times where we were at the beginning of 2020. This is a FreightWaves article, fantastic resource. They do get into the details here, just showing you 47 container ships. And by the way, if you want to ever check this out, you want to actually track and trace them for yourself, take a look at a website called Marine Traffic. Okay, I'm the one that gives out the sources for everything that I show on this channel, where quite frankly, you do not see that, you do not find that basically anywhere else. So I hope you appreciate that. I'm always trying to give away each and every one of my sources. Everything is sourced in the description, but I like to just give that to you whenever I can. Aluminum hits a 10-year high as demand roars. China's supply is curbed. So you put the two and two together, you get an extremely high price. But it's not just aluminum, it's copper, it's natural gas. I mean, everything is going up. Everything is going up. 2 more factors have popped up that add to the Fed's inflation worries. Okay, so we have inflation as measured by the Fed with the core PCE inflation. How about using the CPI inflation? How about using a real, way to calculate inflation? Hey, how about that? Either way, everything has gone up for the most part, okay? When you look at indexes, they've all gone up. And what the Federal Reserve is worried about, or at least what they say they are worried about, is that this persists for too long. Initially, too long would have been into September, but right now, as you're watching this video, we're in September. They are talking now all the way into next year. Oh, okay, well, if it goes beyond next year, then we have a problem. So they're already trying to push that back, moving the goalposts, as they say. Home prices and consumer expectations pointed to more inflationary issues on the horizon for the U.S. economy. The Case-Shiller Index, as we talked about, rose a staggering 19% year over year, the largest increase since going back to 1987, and 1987 didn't exactly end up so well. The Conference Board reported consumers are now seeing inflation running at 6.8% 12 months from now. It could go up a lot higher. Nobody knows. Because of how much intervention they have done, nobody knows. However, many Wall Street economists see inflation falling off in the years ahead, simply buying in to what the Federal Reserve has told them. Well, we believe they made the stock market go up. We have to believe them, and we can't tell anybody anything else. So you saw what happened with the whole infrastructure bill, with the whole economic plan, as they say here. And what's going to happen? You got corporate taxes increasing on small businesses, all kinds of new taxes coming up. But check this out. Corporate America launches massive lobbying blitz to kill key parts of the $3.5 trillion economic plan. Ah, that's right. When you have a lot of money, you could buy your way in and get the waivers and get the loopholes and make sure that you are not part of it. And oh no, the small businesses and the middle class will have to pay for everything. A torrent of political groups representing some of the country's most influential corporations, including ExxonMobil, Pfizer, Walt Disney Company, is laying the groundwork for a massive lobbying blitz to stop Congress from enacting significant swaths of the $3.5 trillion economic agenda. We'll see what happens, but I just think it's funny every single time. Now, looking at what's going on with the markets, they've been loving these economic plans. They've been loving the infrastructure bill. They've been loving it all. But the market's record price action is mimicking late 1999, and it could spark a 10% to 20% correction, according to the long-term bull, Julian Emanuel. But if you read the actual article, he basically says that everything is so fantastic. I love it. Yes, there could be a short-term correction, but everything is going to be just fine. Don't worry about it. Okay. So you got to take what you can from it. But essentially he's saying that everything is getting wacky. Everything's getting crazy. And there's really, no sense in everything going up on a daily basis. The market is simply relying on perfection. So we don't know what the future has in store. There's a lot of uncertainty. Can the market continue to go up as long as we don't have a taper, as long as we have this low interest rates? Absolutely. Speaking of which, can't go up forever. Municipal bonds see the first loss since February. So you got to watch out what's happening here, because as they say here, the municipal bonds haven't been able to rise as high as the stock market, for instance, 7 months in a row for the stock market. Not the case for municipal bonds, if anybody is interested in that. And then we have this. Some people are making money the conventional way. They're investing in mutual funds. They're investing in the stock market, ETFs. Others are taking a different path. These 14 and 9-year-old siblings earn over $30,000 a month mining cryptocurrency. They started with just one. They expanded, then they went from the garage. The garage was too noisy and the garage was getting too hot or something. And then now they brought it to, some sort of facility to do this, expanding at a rate that they now are making over $30,000 a month. I mean, it's crazy. And so whatever you take from this, cryptocurrency aside, what these people are doing here is providing an income source that is not, in my opinion, not exactly normal. They've got an income source. Hopefully they're taking that income source and doing something smart with it, doing something that will be long-term. Now, these are such young people, but individuals out there who are just going to put their money into the stock market because, hey, it always goes up. Diversification can mean a lot of different things. Diversification, in this case, might be mining cryptocurrency. Diversification might be having a real nice garden in the backyard. Diversification might be learning a new skill. So think clearly, whether you are 14 and 9 years old or whether you are 65, and use that to your advantage. The times aren't going to get any easier, okay? I want to tell you about the Insiders. The Insiders is my way to get to you directly. That's how I email people, over 5,000 people, 5 times a week, the video of the day. So when I post that video, you get an email notified directly to you. Why? Because you know who isn't letting my subscribers know when the video posts. Okay, so you can get that for free, of course, at this card up here or at themoneygps.com. And of course, as always, if you want to make Janet Yellen happy and you don't want her to be upset at me, you've got to give this video a thumbs up. That's right. We don't want any battles. We don't want any tension between Janet and I, so please give that video a thumbs up. If you haven't seen this already, you definitely want to check it out. Lots of good stuff in here. Click it, and I'll see you there.